Today on March the 8th, welcome to Joe Bladek's pre-rate show. If you're looking for the rate announcement, fast forward 15 minutes into this video. If you're watching the replay, you'll be able to watch the live rate announcement at 10 a.m. Welcome to my pre-rate show. It's 9:45 a.m. Looking forward to going over the news, the articles, and what's expected today on Bank of Canada's interest rate announcement. All right, so let me put that up there. And really, if you have any questions as I'm going through this with you today, I would like you to pop them into the chat. I'll be monitoring that for us today. And let's get right into it. I know that we've had 8 consecutive rate increases leading up to today, March 8th, 2023. There's a lot of talking about whether or not Bank of Canada will actually raise rates today. It's been highly anticipated. So let's get on with it. This is episode 126, special episode of Canadian Mortgage Weekly. If you don't know who I am, my name is Joe Bladek. I run Canada's only weekly video mortgage news podcast, Thursdays at 11:30 a.m. right on my YouTube, Twitter, Facebook, and you can catch me there. So what has the news been leading up to today's rate announcement? We're going to take a look at some of the articles, what my clients have been saying, what happened last time, what websites are reporting, what the bond yield has been up to. We'll take a look at all that. We'll see what is happening in the market. And then at 10 a.m., again, if you're just joining me, you'll need to fast forward about 12 minutes into this video to see the live rate announcement. But we'll go and we'll cover the live rate announcement together. So, how many rate increases have there been in Canada now since the first rate increase? Well, the first rate increase was 8 rate increases ago. So, we've got 8 consecutive rate increases leading up to today. Quite crazy how much rates have changed since we first started covering the Bank of Canada interest rate announcements. What's been the news leading up to today? I mean, we've had 8 consecutive rate announcements. I've seen my clients go through the heartache that have had variable rate mortgages. Well, the news expected today is either some news is saying that there's expected of no change, that Bank of Canada will actually pause hikes today, and other news articles and outlets are saying that there will be a 25 basis point increase at the most. So that'll be interesting to see, considering the U.S. Federal Reserve has been very aggressive with their tightening policy, and they're continuing on raising rates in the U.S. So usually the Bank of Canada does follow what the U.S. is doing. It'll be interesting to see if we actually do pause rate hikes today. And if we do pause rate hikes, this will be the first pause since 9 meetings ago. So we'll have some relief. We'll have some leeway. I think Canadians will be very appreciative if rate hikes do pause. I know that variable rate mortgages being affected the way they are, as well as lines of credit, home equity lines of credit, HELOCs, and variable rate credit cards, all those minimum payments have been increasing 8 consecutive times. All right. And then also the last time we covered 𝗪𝗏 rate announcement, the Bank of Canada did comment that they are hinting at a rate pause for the next rate announcement, that being today, March 8th at 10 a.m. What has the bond yield been up to? And why do I cover the bond yield? The bond yield actually dictates where fixed rates are going rather than the Bank of Canada dictating where the variable rates are going. And the bond yield, that's actually the market pricing in their expected rates for mortgages. And the bond yield, it's sitting at 3.53%. Where does that compare to where we were at last rate announcement? Well, it's actually sitting higher than the last rate announcement. So that's an interesting conundrum, because if the market is pricing in higher rates, could mean that the Bank of Canada could increase rates 25 basis points today. I'll get to more of that later. And to talk a little bit about what the bond yield has been up to since the last rate announcement, bond yield was slowing down in early February. Keep in mind, the last rate announcement was January. It was going down in early February, and that led to quite a big substantial decrease in fixed rates. So any one of my clients that did get a pre-approval during the time in mid-February was able to capitalize on those lower fixed rates, lock them in, and then since rates have climbed back up with the bond yield climbing back up to where it was, and right now it's sitting at its highest point it's really been sitting at since the summer of last year. So interesting to note that. We'll see how that affects rates today. Now, what about the CDOR rate? Again, I follow that metric here on Canadian Mortgage Weekly to ascertain whether or not the variable rate mortgage is a competitive mortgage for you right now, and for my clients and for myself. Currently, it's sitting at 5.03%. It's been actually holding this level quite consistently since January of 2023, where we saw it at 5.07. So it has come down a slight amount, but not really moved very much. What does that mean? Well, that could actually dictate that market is pricing in a rate pause versus the bond yield pricing in a rate increase. So let's take a look at the articles that I've researched leading up to today's rate announcement. Well, what has the inflation articles been saying? Inflation, although still high, has been slowing down. It's currently still at very high levels at 5.9%. That's actually still a lot lower than it was in the summer of 2022, where we saw over 8% inflation rates in the summer of 2022. Fixed rates still actually are remaining lower than variable rates. And that doesn't really happen very often where fixed rates are lower than variable rates. So it's an interesting market that we are in. If you're looking ever to decide on whether or not to get a variable or a fixed mortgage, a lot of people are leaning towards a fixed rate mortgage right now because variable rates don't offer savings. Whether or not that is true long term remains to be seen. However, the ones that are taking variable rate mortgages are convinced, those clients are convinced that although their rate may be high today, it will decrease quite considerably in years 2, 3, 4, and 5. So not many clients do wish to take that risk. However, the ones that are very convinced of that. Where do you stand on that? I would love to hear if there's any comments about that from your perspective, if you think it's worth taking the risk right now to jump into a variable rate. If you're joining me right now on my replay video, keep in mind that the live rate announcement is 6 minutes ahead. So make sure you fast forward about 6 minutes to catch the live rate announcement. If you're catching me just now, you're watching Joe Bladek's live pre-rate show on Canadian Mortgage Weekly, where we cover off all the different news and facts leading up to today's rate decision by the Bank of Canada that will be reported live at 10 a.m. All right, so what have my clients been saying? Well, it's been pretty slow leading up to the end of 2022 and early 2023. However, the clients that were on the sidelines and waiting to do something are now coming out and saying to me, you know what, Joe, we think rates are going to go, not really going to move, and we need to start making a move. So these clients are actually going ahead, getting a pre-approval, and starting to look for a home. And this means that a lot of people are actually okay with the rates where they are at and feel like rates are going to remain where they are at and are okay with it. They're just making do that the mortgage payments will be higher. And a lot of people have really understood now that rates will not return to the 1% to 2% levels we were seeing in early of 2022. And what are clients doing when they're getting a mortgage? Well, they're locking in for anywhere between 2 to 3 year terms up to a 5-year term. As I said, very few clients are taking a variable rate mortgage. Those that are very convinced that rates will drop in years 3, 4, and 5, possibly even years 2, 3, 4, and 5. And if you take a variable rate mortgage today, you're going to be paying around 6 to 7%, which is extremely high. However, if rates do drop in the future years, you could benefit versus a fixed rate if that bet does work out for you. It's really two different bets, really, when you think about it. Are you going to lock it in for the next 5 years and eliminate any potential future decrease? Or are you going to take a variable and open yourself up to both the future decrease or the future increase? It's a bet. A lot of clients are going fixed right now. All right. So what's happened last time we met in January for my pre-rate show and live rate announcement? Well, last time there was an increase of 25 basis points that happened in January of 2023. That increased the overnight rate in Canada to 4.5%. Remember, last year in January of 2022, the overnight rate was sitting at 0.25%. So, wow, what an increase. Biggest increase was on July 22nd of 2022. That increase was 100 basis points. That was the largest increase I had seen in my entire career of doing mortgages. And right now I'm in my 13th year. And the last time there was a decrease, that was March of 2020. And as we all remember, that was when COVID was hitting the world, and the Bank of Canada decided to decrease rates to ensure that we were ready to go with our economy. And it's interesting to note that at that same time, there was monumental job layoffs. And when we saw those job layoffs, the Bank of Canada did respond with cutting the rates quite significantly. So right now, what are other websites reporting? Well, jobs reports showing that jobs went up in January. Over 100,000 jobs were created in January. So that doesn't really bode well for future rate decreases at the moment. However, we are also seeing layoffs at the same time from companies like Facebook, Google, Microsoft, Twitter. So if layoffs do continue at the rates that we've been seeing from there, which are in the thousands, that could offset the gains. And if we do see extreme job losses in Canada, we could see a rate decrease quite soon if that happens. Now, websites are reporting that there will be a conditional rate pause on today's rate announcement. That will mean that we will end our streak of 8 rate increases in a row and will not proceed to have 9 rate increases in a row. However, the jobs report is showing that there could still be future rate hikes ahead of us. So even though the websites are reporting this conditional pause, could be future rate hikes. Really, Tiff Macklin had said in his last rate announcement that there was hinting there of future rate pauses. So that would be today. And right now we're seeing conflicting economic signals. All right, so it's 9:59 a.m. If you're just joining me now, my name is Joe Bladek. I'm running a pre-rate show ahead of the live rate announcement coming out at 10 a.m. We should have an announcement here any moment now. And once we get this announcement, I'll go through some of the impacts it will have on clients that are having financial loans, mortgages, credit cards. Still no announcement yet. I will keep checking back here for the press release. All right. In the meantime, what is the rate hike chance today? We're expecting a rate hike chance of 69%. That is according to mortgagedashboard.ca. And mortgagedashboard.ca is also expecting a rate hike chance in 9 months of 0%. So that is an interesting stat that in 9 months they're expecting no rate hikes. Okay, what do we have here today? Bank of Canada has released its interest rate announcement. What do we have on its interest rate announcement? I'm just taking a look at it here. Well, good news for all mortgage holders and line of credit holders in Canada. The Bank of Canada today does hold its interest rate target for the overnight rate at 4.5%. There is no increase. I repeat, this is the first time the Bank of Canada has paused rate increases in 8 consecutive increases. Today would have been the 9th consecutive increase in a row if the Bank of Canada did proceed with a rate increase. However, today, the Bank of Canada has paused its rate increases. The next meeting is on April the 12th of 2023. So we still have some time. Could be future rate increases on April the 12th, but right now the Bank of Canada has paused rate increases. So let's take a look at this and how it affects anyone that's in a variable rate mortgage. Well, it doesn't really affect you at all. You will not see your payment change this month. Fantastic news for those who have had variable rate mortgages and have seen their payments go up almost every month with these 8 consecutive rate increases. Anyone that has a home equity line of credit, your rates will not go up. Your minimum payment will finally stay the same if you have the same balance. Variable rate car loans, your amortization will not change on those. And unsecured lines of credit and variable rate credit cards account, those will not be affected. You will have the same rate. Keep in mind, if rates change, the payment does either increase or decrease accordingly to the rates going up or down. And if you are ever looking for a variable rate mortgage that doesn't have its payment fluctuating, I do have options to set up a mortgage for a client where the payment stays static, but it's the amount of interest and principal that changes or the amortization that changes. All right, so what is the Bank of Canada saying with its rate announcement today? They have released some notes here. And looking at the notes here, the Bank of Canada has made note that global economic developments have evolved broadly with an outlook that in January, monetary policy report that global growth continues to slow. That's good news for rate pauses. And inflation, while still too high, is coming down. So those are two primary signals here that indicate why the Bank of Canada has held its rates today and not increased rates. Repeat, Bank of Canada has not increased rates. So making note here that the United States and Europe show inflation somewhat higher than expected in January. And that could mean why the Bank of Canada's paused rates and the US Fed has raised rates. All right, what else are we saying here? I don't want to take too much time reading this, but in Canada, economic growth came out flat in the fourth quarter of 2022. That is, in fact, lower than the Bank of Canada projected. Consumption, government spending, and net exports all increasing, and weaker GDP, and largely because of the sizable slowdown in inventory investment. Interesting. Restrictive monetary policy continues to weigh on household spending. That's correct. Canadians have definitely not been spending as much as they have been, with a lot of tightening there. And business investment has weakened alongside slowing domestic and foreign demand. All good news to point for the Bank of Canada to pause rate increases. Now, they do mention the labor market. As I mentioned in my pre-rate show, the Bank of Canada does pay attention to the jobs report. If we do see significant layoffs, then the Bank of Canada will be forced to cut rates. But in January, we saw an adding of over 100,000 jobs. So they are making comments here that the labor market still remains very tight. Employment growth has been surprisingly strong, and that the unemployment rate remains at near historic lows, and job vacancies are elevated. Wages continue to grow at 4 to 5%, and productivity has declined in recent quarters. Interesting. So they are noting that there is a tight labor market. That is something that does usually indicate future rate hikes are expected. We'll have to make sure that we follow to see if there is continuing labor market tightness in March when those numbers come out around March 20th or 21st. So I'll be reporting those numbers on Canadian Mortgage Weekly. For now, let's continue going on with this report that has come out for this rate pause. They do indicate that inflation eased to 5.9% in January. And as I mentioned in my pre-rate show, it has been trending down, although still high. Inflation did peak in the summer of 2022 at over 8%. Looks like reflecting lower energy prices in energy, durable goods, and some services. Now, Warehouse does mention that prices have still been increasing for food and shelter, and that has continued to cause hardship for Canadians. And weak economic growth for the next couple of quarters, pressures in product and labor markets are expected to ease. So they are expecting that the labor market pressure will ease. This should moderate wage growth and increase competitive pressures, making it more difficult for businesses to pass on higher costs to consumers. So that is very interesting as well. They're expecting businesses to claw back on increasing prices and that it will become more competitive in the marketplace as product pressures ease in the future, meaning that Canadians will have less demand to purchase goods and services. Continuing on shows that overall the latest data remains in line with the bank's expectation that CPI will come down to around 3% in the middle of this year. Wow, that is very refreshing. The fact that inflation will come down to 3% in the middle of this year is going to be absolutely fantastic. I can't stand the fact that prices keep rising in Canada, as I'm certain none of my viewers can stand either. Okay, year over year, measures of core inflation tick down to about 5%, and 3-month measures are around 3.5%. Both will need to come down further, as will short-term inflation expectations to return inflation to the 2% target. All right, and last few comments here. At January decision, Government Council indicated that it is expected to hold the interest rate policy at its current level, conditional on economic developments evolving broadly in line with the MPR outlook. Based on its assessment of recent data, Governing Council has decided to maintain the policy rate of 4.5%, and that quantitative tightening is complementing this restrictive stance. Any hints here? Well, Council will continue to assess economic developments and the impact of the past rate increases, and it's prepared to increase policy rate further if needed to return inflation to the 2% target. Bank of Canada remains resolute in its commitment to restoring price stability for Canadians, and that the next interest rate announcement is on April the 12th. Wow. So they are leaving the door open for future rate increases. However, my professional assessment of this report is stating that other than jobs being at an extreme high, it is showing that inflation is coming down, that demand is slowing down for services and goods, government spending, consumption, all weaker than expected because GDP has gone down, and that businesses are showing a sizable slowdown in inventory investment. So looks like what the Bank of Canada has done is working, and that with that, we are expecting rates to possibly have maybe another pause in the future. We'll have to see what the jobs report comes out with in March. As I mentioned, the jobs report in March will come out around March the 20th to 21st. If we do see that there are additional jobs added, quite a considerable amount of jobs added in Canada, that would put pressure on the Bank of Canada to increase rates further. However, if we're continuing to see that GDP slowing, inflation comes down again, we'll have new numbers around that time as well, March 20th to 21st. Inflation continues to come down. It could put a pause on another rate increase going forward. That will be a huge relief to Canadians, as we have been exposed to 8 consecutive increases in rate hikes since 2022. So, what wonderful news we have today. The Bank of Canada has paused rate increases. Rates are remaining at 4.5%, which means that the prime rate will not change today, indicating that your lenders will not change their rates on your variable rate mortgage. Very refreshing. You will not receive a notice that your payments are going up again. I've been receiving so many of those notices on my own variable rate mortgage. And if you have a variable rate mortgage and these trends continue, so much so that we'll see layoffs in the future, we might even see rate cuts at the end of this year or possibly next year. And I say this with confidence because both National Bank and TD Canada Trust have come out saying that they're expecting rate cuts by that time. And with rate cuts come lower rates and lower payments. So for anyone that has a variable rate or mortgage right now, that could be refreshing news that we'll come out with in end of this year, 2023 to early next year. So where do we head from this? Well, we'll have another pre-rate show on April the 12th, 2023, where we will have an interest rate announcement at that time. In the meantime, you can join me tomorrow for my regularly scheduled podcast episode where we will look at what makes up a good credit score. I've been focusing in March on credit as credit it's National Credit Education Month in Canada for March. So with that, thanks for watching today. Let's take a look if we have any comments. I'll make sure I respond to each comment after the show, and I hope you have a great